Hello, I am Mi-jun from Michigan State University. We begin today's big news on April 23rd. Hello, we welcome you to Mi-jun, who is maintaining the norm of United States stock investment. I don't know where, which country, or which city you plan to retire in while preparing for retirement with our Mi-jun subscribers who are with this broadcast. When we first face life, the place where we are born is determined without our will, isn't it? However, when it's time to retire, it's incredibly important that we can choose where we want to retire according to our own heart. In that sense, among those of you who are watching this broadcast, those who are in Korea may not need to change their retirement region to another country. As I mentioned in the previous segment, I had an incident where I was blown away by the wind and had to visit the hospital. So every time my body gets hurt like this, I feel how incredibly important medical facilities and services are after retirement. In that sense, I am very optimistic about the possibility of retiring in the United Kingdom, and why is that? As many of you may know, the United Kingdom has a lot to offer. There is a medical program operated by the state called National Health Service, and most of the medical expenses are free. Whether you're sick with anything, various diseases, or if there's an accident, there's no need to worry about medical expenses. But the problem is, it's either too delayed or the process is complicated. I had a hard time last year because my back wasn't good, many of you probably remember. At that time, I had to go to a general practitioner, now called a general practitioner, for initial treatment, and after receiving initial treatment, I could see a specialist if recommended by the doctor. We often talk about specialists, so after meeting a specialist, if the specialist recommends again, you can get an X-ray or magnetic resonance imaging and then start treatment again with the magnetic resonance imaging results. This process takes several months at least. So when our body hurts or we have an accident, it's important to get medical services quickly, but it's really hard to get such services in the United Kingdom. So personally, I don't even think about retiring in the United Kingdom. I'm thinking I might retire somewhere in Southeast Asia. Anyway, from our perspective of retiring with United States stocks, one serious decision we have to consider for the future is where to spend our old age after retirement. We will start with today's United States stock news prepared for April 23rd. Today we'll summarize the United States stock market's performance from yesterday, starting with the S&P 500 tear. It's filled with very straightforward colors, especially it's hard to find any red. Most sectors are filled with one dark color, excluding some stocks here. Especially the tech stocks we are interested in are dominated by a very deep dark color. So not only did the entire United States market rise without relation to the sector yesterday, but most stocks also made a very good trend by rising sharply. Yesterday, the microcap was the best, rising 3.55%, and that means very small cap stocks were the best. The second best was the Dow Jones, which rose 2.69%, and the third best was the Nasdaq 100. It rose 2.63%. So small cap stocks are riding this wave, and the Dow Jones has risen quite a bit. There must have been some good news about the economy allowing us to speculate like this. The scores of all 11 sectors in the S&P 500 tell the same story. At the top, the financial sector rose 3.31%. Second is the consumer discretionary sector, which rose 3.16%, and fourth is the communication services sector. As I've explained several times, communication services are heavily weighted with companies like Google or Meta that rely on advertising because of their positioning. And next, the energy sector also rose by 2.5%. Therefore, it was a day where cyclical stocks, which are generally related to the economic situation, showed a good performance. This is the part we need to focus on. This means that a rebound led by cyclical stocks is a very good signal for the overall United States market. Cyclical stocks rise when the macroeconomic environment and expectations improve, allowing us to make such assumptions. So let's first examine why the United States market overall showed a good movement led by cyclical stocks yesterday. This is an article I shared with our members in the United States, As a quick report 15 hours ago, the market was informed of this positive news that the United States-China trade dispute is expected to be resolved soon, according to the Vice President. Let's read a little more about the details. What does the Vice President Scott Vincent say? He conveyed extremely positive news at a private investor meeting on Tuesday, predicting that President Donald Trump's trade war with China will be resolved in the very near future. Minister Vincent attended a private investor meeting hosted by Jeffrey Morgan Chase in Washington, District of Columbia. No one believes that the current level of tariffs can continue in the next phase of our relationship with China. So now we are in a trade war, but in reality this situation will be resolved soon. It won't be long term, that's what I'm saying. The stock market, which was already recovering the day before, suddenly started to rise sharply after the statement from the Fed. While doing so, all three major indices showed a good trend of rising more than 2% and closed. Minister Bessent further commented that he believes the completion of long-term negotiations between the economic superpowers will reduce uncertainty in the world and the market. He also suggested this will soon lead to a sharp United States stock market rise, providing relief. While the United States has raised tariffs on Chinese imports to a maximum of 145%, and China has retaliated by imposing a 125% tariff on United States-made imports, the Trump administration has emphasized that its goal is not to decouple from the Chinese economy. What's this about? The whole world has been growing together as a global economy, and there is no plan to completely sever this relationship. He made it clear that there is no plan to live well in the United States alone. Not following this. On this day, the United States Treasury Secretary Vincent mentioned that the negotiations with China could be a long-term battle and it could take about 2 to 3 years in detail. However, both sides do not think that the current situation can continue. So neither China nor the United States think it's possible to maintain a tariff rate over 100%. In other words, the current situation is extremely unstable. But ultimately, we are moving towards a solution, and it is possible to interpret this optimistically. So, after a long time, positive news was delivered to the market, and yesterday, all three major indices could see a good trend of rising more than 2%. I will continue summarizing the current state of the United States stock market. Yesterday, as the market generally surged, the breadth of the market improved significantly. As you can see, based on yesterday's closing, 23 to 26% of stocks are trading above the 51-day moving average. Even just a day ago, this was less than 15.1%. And even looking at the long-term trend, now over 30% of stocks are finally showing a positive momentum. This number also rapidly increased from 25% to 30% just a day ago. Therefore, the number of stocks with improved trends has increased significantly. Next is the Volatility Index. The Distribution Index also fell to 28.34. The important point is, it's continuously strong and rising from 52 after marking the bottom and the turning point like this. So far, it's still below 30, so the volatility is not low, but we can find meaning in the fact that it has fallen below 30. If the Volatility Index continues to decrease, the market can eventually create a stable environment, and this is raising expectations. Next is the Fear and Greed Index. It rose one step from 24 to 25 yesterday. Therefore, there is still a sense of extreme fear in the market, but little by little, this kind of anxiety is disappearing. The trend is gradually improving, sentiment is on the rise, and it seems that we can summarize it like this. Lastly, the market score of choice stake has also risen to 25. If that story improves a bit more, it can be summarized that it could rise to the unstable stage in the distribution unit price finally. I will try to check the score of Midden topic. Yesterday, all 18 types were upgraded, and the type that saw the best trend is B2. The ProShares Ultra Bitcoin Exchange Traded Fund was the best, rising 9.44%, and the second best type was also related to Bitcoin, the Strategy, which rose 7.95%. The top risers were 6.20%, 5.74%, Innodata 5.25%, Tesla 4.60%, 3.51%, Amazon 3.50%, Talon Energy 3.25%, Meta 3.2%, Nextracker 2.75%, Celestica 2.71%, 2.57%, 2.39%, 2.08%, 2.04%, and 2.03%. Bitcoin has now risen again by 0.87% and is now at 94,270. On the screen now is the movement of the futures, with the United States stock market continuing to rise sharply. First, the 1.77%, the S&P 500 is up 2.20% and the 2.59%. Now, there's a reason why the United States stock market is continuing to rise in the futures like this. It's because President Trump threw two positive signals into the market. The first one is, while saying that President Trump has no intention of firing the Fed chairman, he ended the situation where the United States stock market was rapidly rising. President Trump has no intention of firing Chairman Powell before his term ends next year, he said. As you all know, just a few days ago, he said that he should lower the interest rate, and he could immediately fire him if he didn't lower the rate. He made such a very strong statement. So the market suddenly faced a big reversal. You can see it this way. With this announcement, the possibility of the Fed chairman's dismissal has completely disappeared. Thus, the interest rate's independence has been reasserted. That story is about a very big sleepwalking incident that has disappeared. Thus, the situation quickly turned very positive. This is how it can be interpreted. As a result, political risks have decreased. If the uncertainty of the market greatly increases, it can be concluded that the investors' minds have improved. Meanwhile, there remains a sense of anticipation for the interest rate hike. If you view the United States stock market as bullish and performing well, this is how you will perceive it. Indeed, this is the current state of the United States stock market. It's not always the case that things have to improve for the market to rise. Even in the worst of situations, if there's even a slight improvement, the market can rise. That's why, rather than downside risk, in the worst of situations, there's a tendency for upside risk to increase. It's important to remember this. Now, there were two reasons why the futures could suddenly rise like this yesterday. The second one is about China's customs. Trump mentioned that China's customs will have a big impact in the future. Both of these points were announced after the market closed, which is why the United States stock market is showing a positive trend in after-hours trading. It seems like this is the case. What are the more specific details about this news? I will try to share a bit more insight with today's United States stock footage right after this, to give you a better understanding. But before that, I would like to read a few words from the United States to all of you. President Trump did one thing himself. He said he would end the war in Ukraine and Russia right away, but ending it is not as easy as you think. But there is a big problem here. While trying to hold a war, trying to end a war, and trying to find inflation, there was such a big plan, but now there is no thought that the war will end a little. Recently, the worry about inflation has been rapidly increasing. You will see it this way. Well, as the inflation expectation rises, the stock market is falling due to concerns about recession. And if the risky stock market falls, usually money has to move to bonds. But now, as the safe United States Treasury yields are rising rapidly as the Fed's tapering appears, two extremely difficult situations are colliding. As a result, from President Trump's perspective, if Ukraine ends the war, when the war ends, the national debt yield could decrease. So, the United States government had a grand plan to reduce the cost of its debt, but there was a hitch in this plan, as you can see. Well, from now on. So, wouldn't we see a complete move towards fiscal policy a bit more? It would be fine if the war ends. But if the war doesn't end soon, perhaps they won't reduce expected inflation while implementing fiscal policy. I personally expect this. Well, what's the current situation of United States stocks? It's rapidly rising due to two messages from President Trump. The first is about the decision of the Federal Reserve, and the second is speculating the possibility of a tariff policy with China being relaxed. Well, I will try to show you a more detailed content about this important news through today's United States stock video. The Consumer News and Business Channel reporter who went directly into President Trump's office yesterday and asked this question will introduce you to the very detailed content.
The remarks we have been continuously discussing are now being held at the White House. Just a while ago, Jamin Javers was at the White House, and now I will tell you the whole content.
I was in the Oval Office with some reporters. President Trump was in the middle of a ceremony appointing a new chairman of the Securities and Exchange Commission. I asked the president if he intended to declare a national emergency. And last year, I was able to ask him if he thinks he has the power to do so. The president did not want to talk about that issue. When asked if he has the power to declare a national emergency, he said he had no intention of doing so and that he never had any intention of doing so in the first place. He said that speculation is often exaggerated in the media. However, the president reiterated that he has no intention of dismissing the Broadcasting Commission chairman and has no plans to do so. This point was particularly intriguing. He also answered questions about his concerns, especially about tax issues and the impact on the South China Sea disputes related to China. The president said this: in the end, he believes that this tax will generally help the country, right? That is, he may be a bit shocked right now, but in the long run, he revealed his position that it will have a positive effect on the United States economy. He also received questions about the ongoing negotiations with China, but did not provide a detailed explanation of their current stage or progress. The specific content was not disclosed. However, I also asked the president about his overall view on interest rates, especially the remarks made by the Treasury Secretary this morning, that is, whether he thinks the current high interest rates are actually a tight monetary policy to curb the trade war with China. He concurred with the Secretary's assertion that the current United States-China trade situation resembles a restrictive monetary policy. However, he also said this: he doesn't think the current tariff rate will continue like this, meaning there could be adjustments depending on the situation. He said the tariff rate would significantly decrease, but did not specify by how much. I asked, and he said it wouldn't go down to zero, but it would be significantly lower than it is now. He didn't give an exact number, but he implied that it wouldn't be completely eliminated. So from what I see, the current president seems to want to send a signal to the stock market and wants to be heard. He showed a very flexible attitude towards the annual rate, and it was clear that he intended to strongly convey the message that he is prepared to negotiate with China.
What's interesting, the president said he would not comment on the negotiation situation with China, but this morning the Pentagon official said that the negotiations have not even started yet. There seems to be a strange temperature difference between these two statements. I wonder why there is such a discrepancy between the explanations of these two people. Just before...
The reporters tried to draw an answer by asking the president, can you give us any updates right now? Did you have a chance to talk with Xi Jinping, and was there any progress? What stage is the negotiation at specifically? The reporters continued to ask, but the agreement will continue to be reached. He reaffirmed his optimism about the improving situation with China, focusing on conveying a diplomatic tone rather than specific details. He expressed great confidence in his relationship with Xi Jinping and said he felt good about it, but there was no specific content about how far the actual negotiations had progressed, who met with whom when the talks were scheduled, or what proposals had been exchanged. In the end, the president simply reiterated his belief that an agreement would be reached. When asked if he maintained regular communication with Jay Powell, the president refused to respond.
Next, we move on to the results of the morning. Yesterday, among the mid-level topics, Tesla's morning results were announced. Firstly, looking at the results, it says miss here. So both the sales and the morning results failed to meet the market's expectations. Tesla's first quarter performance exceeded monthly estimates, and due to weak sales performance and Elon Musk's participation in the Trump administration, the situation was largely adjusted to already lower expectations. This part is more negative if you look at it. The market consensus has already significantly adjusted downwards. But even then it's still disappointing and there were misses. Tesla recorded a net profit margin of 27%, but it was expected to be around 36 to 42% in the monthly forecast. The quarterly revenue was $193 million, but the forecast was between $201 million and $214 million. And looking forward, the growth rate of sales in 2025 is no longer certain. Why? Because Tesla's second quarter results announcement was a time to re-examine the interperiod guidance, and they failed to provide the interperiod guidance this time. In light of this, Musk speculated that in 2025, growth of 20% to 30% compared to last year might be possible, but now they can't even provide guidance. The situation is not good at all. As you can see, Tesla's performance is not good, but it's not completely disastrous, as mentioned in the article. Personally, I don't agree. It's a disastrous level. However, the important point is that it has already been reflected a lot in the stock price in the market. This part seems certain. Operating profit fell 66% year over year to $390.9 million. This is the lowest since the second quarter of 2020. Automobile sales decreased by about 20% compared to the same period last year, and the average sales price per vehicle also decreased from $44,000 last year to $39,000 in the first quarter of this year. Compared to the past, the sales price and volume have decreased significantly, resulting in a 20% reduction in sales. The operating profit margin for the automotive business, excluding regulatory credit sales, was approximately 10%. This is a 6% drop from last year's same period, which was 6%. However, it matched investors' overall expectations. In this morning's report, the term return to growth that often appeared before has been dropped. The term return to growth has been continuously appearing every quarter, but this time this phrase has been completely eliminated. Instead, they wrote that they will review the 2025 guidance by updating it in the second quarter. On one hand, artificial intelligence remains a key growth driver for Tesla, which the company continues to emphasize. However, despite such performance, Tesla's stock is actually rising after the earnings announcement. This is due to one piece of negative news being delivered. The plan for a new car, including a cheaper model, is underway, scheduled to start production in the first half of 2025. So now it's April, but the talk of starting production in the first half of the year is. So in the next 2 months, Tesla will release a new car, and this specific schedule has been confirmed again. So, because of this news, Tesla is given a few months of preparation time. From an investor's perspective, there will be a huge expectation in a while, and such hope has been instilled. Tesla has a greater impact on the energy business than the car sector in terms of current tax structure. This is what was discussed. The reason is, what about Tesla's Megapack? It is said that it mainly uses lithium iron phosphate cells imported from China. Currently, the proportion of lithium-ion battery production capacity in North America is less than 5% of the world's total. Since China occupies 84% of the world, it is natural that the energy business is more influenced by customs than the automobile parts. You can see it this way. Well, I'll try to wrap it up in a nutshell. Tesla's sales, operating profit and profit rate have soared compared to the same period last year. However, we already knew that the volume of April's initial announcement decreased by 13% compared to last year. Therefore, investors had some expectations for the poor performance. Of course, the volume of India compared to last year has dropped by 13%, but sales have decreased by 20% compared to last year as the price has dropped now. Well, there was one positive news despite the worst performance. The point is that Tesla is keeping the schedule for the release of the new low-cost car as it is. Well, what happened on Monday before the announcement in the evening? Tesla's stock fell 6%. What did Reuters report on Friday? There was a report that the release of the new low-cost car was pushed back to 2026. It was a rumor-based article, but this caused the stock to fall significantly. And then, while announcing the results yesterday morning, they denied it. If positive news such as the possibility of launching a low-cost car in the first half of this year is delivered, it will recover the 6% drop in a single stroke, as you can see. As shown here, the following phrase was included in this morning's report. The plan for a new car, including a cheaper model, is underway to start production in the first half of 2025, and these vehicles are. It is expected to be produced on the current production line, utilizing all the elements of the third-generation platform and the elements of the current platform. Therefore, production will start soon. We have confirmed it again. Why hasn't Tesla's stock price plummeted even with such a worst-case scenario? It's because there is still hope. Well, we need to keep the promise of whether this low-cost car will be launched and production will start in the first half of this year. So we can summarize it like this. Well, if you look at the current slump in Tesla's stock price, it rose by 46% during trading yesterday, and it's currently making a bullish trend of a whopping 636% in today's trading. The futures market explains the significant price increase. Yesterday at the press conference, Elon Musk made a very important announcement. Elon Musk, the chief executive officer of Tesla, said that he would reduce the time he spends working for the Trump administration. In other words, he will focus on running Tesla, delivering such a definitive message. As many of you know, Elon Musk has been critical of the efficiency of the Trump administration. Starting in May, he plans to limit his government collaboration time to about 2 days per week, and he plans to spend more time on Tesla management. He conveyed this specific plan. Therefore, there has been a significant drop in Tesla's stock price due to Elon Musk's political activities. But if this negative situation is resolved, there is a chance that Tesla's stock price could rise sharply, and I will conclude like this. The content prepared for today is an article that I wrote myself. This is for the manager in charge of funding who is helping with the operation of the Midun All-in-One membership. The trend of the United States market has not been very good for a long time, and at times like this, for the members of the Midun All-in-One and for the readers of Midun, I would like to convey a somewhat important message, a somewhat personal message. I wonder how it would be to give such advice. So after a long time, I wanted to write a short article about the investment strategy I have, or philosophy, and deliver a personal message to you all. Well, I titled it Retiring with United States Stocks, for us to retire with United States stocks. While we are creating a community and investing together, there is a possibility that we might forget the basics when such a difficult situation arises. Why we are investing now? What is the reason we should proceed with the investment? When such a difficult situation comes, we should go back to the basics. If we remember why we are investing in United States stocks, we might be able to overcome this difficult situation with unexpected strength. I've had such thoughts. Since I wrote this myself, instead of me reading it directly, I'll have an artificial intelligence that mimics my voice read it out smoothly for you. That concludes today's broadcast. Thank you to everyone who stayed with us until the end. I will gather various information that can help your investment activities and see you again tomorrow. We will all fight together until the day we retire with our United States stock investments. Have a happy day. Thank you. Just a few months ago, President Trump was talked about as the most business-friendly, pro-market president in history. But it's surprising how quickly the situation has changed. Just like a recession, stagflation, and other worst-case scenarios are becoming a reality. Despite the potential for a market crash, we will continue investing in stocks. Why? Because no other alternatives seem clearly viable. Currently, even if you are in your 60s, there is a 50 to 60% chance that either you or your spouse will live into your early 90s. There are only 3 years left until the 2028 election, but the period you have to cover with your retirement pension is at least 30 years if you are currently in your 60s and at least 40 years if you are in your 50s like me. The most important point here is that it is impossible to keep up with price increases for hundreds of years in the future with just cash assets like savings and deposits. For example, if you need 300,000 won per month for living expenses, that's 3.6 million won per year. And if you add 40 years to that, you need 144 million won. However, can we survive a month with 300,000 won in 20 or 30 years from now? No, it's impossible. In summary, even with a retirement fund over 140 million won, there's a high chance of an unhappy retirement life. To maintain our post-retirement living standard, investing in risk assets is crucial. This is why we need to continue investing in United States stocks, regardless of who the President of the United States is. Even after our economic activities have completely stopped and after complete retirement, the stock market, bear market adjustments will continue to occur. In the case of retired investors, one of the biggest investment risks is the sequence of returns risk, also known as the sequence risk. In short, a severe bear market or significant investment loss early in retirement can put one's retirement at risk. Therefore, it's important to set aside several years' worth of living expenses in a safe investment to prepare for any potential shocks that could derail your retirement plan. Even including the current recession, the average return on United States stocks over 5-year periods since 1995 has been 10.6%, and the average annual return on the S&P 500 over the past 5 years is still a robust 16%. Investing in United States stocks still has the highest probability of success for retirement preparation. In the end, the most important thing is not to leave the market. You must remember that without investing in United States stocks, you cannot beat inflation over the next 30 to 40 years. If you're uncomfortable with a 100% stock allocation, I recommend you consider adjusting your mix of stocks and cash equivalents to an 80-20-70-30 or 60-40 ratio. Asset allocation is far more important than market timing. Even if you're in your 40s or 30s, a basic understanding of asset allocation is essential. Even if the current economic outlook feels like the worst, unless you're a 90-year-old investor, you have to remind yourself that corrections or bear markets are just a part of investing that will continue to occur over the next several decades. Every time a correction comes, every time a bear market occurs, if you stop or give up on stock investing, you are giving up on your own strongest weapon to survive the battle against inflation in the second half of your remaining life. In times like these, everyone feels anew the importance of diversified investment. It's a time when many investors regret and wonder how good it would have been if they had diversified their funds into safe assets like gold or cash during normal times. However, more important than the investment strategy itself is the ability to consistently maintain the strategy. Predicting the future is always difficult. Even after the world-shattering corona situation, the market recovered quickly, exceeding expectations. Despite disappointing United States political power, I still believe in the growth opportunities from the Fourth Industrial Revolution, and I'm betting on American companies' prosperity. As has been the case for over 100 years, the world's top companies will seize the crisis as an opportunity to innovate and do their best to increase sales and profits. The method of encouraging investment in American stocks as a preparation for a stable and prosperous retirement life is not yet visible.